Right, let us begin. So, discussing crypto. For those of you who aren't familiar with what crypto isn't a currency, it's actually an algorithm used to secure that the transaction between two individuals happen securely. It uses something called encryption, and that basically hides the information or details of the information from anyone who's not partaking in that transaction. For those who aren't too software minded or technically minded, a better way to look at it is similar to WhatsApp. WhatsApp, if you're messaging somebody, you would see that the communication between you and that person is encrypted, meaning that without having either you or their phone in possession, no one else can simply see the messages you pass between each other. Now, this exchange messaging between two people over WhatsApp and replace it with transacting between two people, passing of funds from one person to the next in exchange for something else. That is basically how crypto functions. One of the benefits of crypto is that it has the information available publicly without having the details public. So the address of your wallet that holds your crypto, it is a string of characters that look like garbage, look like meaningless stuff. Anybody who has never sent you any crypto to your wallet will not be able to see that string and know it pertains to your wallet. But the public ledger would have any and every transaction that that wallet did with any other wallet. It would publicly have how much of what coin was transferred between every wallet, while not publicly disclosing that said wallet belongs to person A or person B. This allows for full disclosure of information on a network, preventing anybody from committing fraudulent edits of those transactions. Meaning, if you sent me 100 of a crypto coin, regardless of what the coin is, and I received 100 of the crypto coin, I can't then make a claim, oh, you only sent me 90 coins and you owe me another 10. I can't. That transaction is public. There's something called a block explorer that would allow any individual to use a transaction ID, which is shared between two people who transact, to validate the transaction, when it occurred, between which wallets it occurred, and how much funds were passed in between. So if it ever got to the point where it needed to be taken to a legal step, all the information will be there. You can't fraud it that way. You would have to fraud the person, you'd have to convince a person, you or someone else, that they want to send crypto to. Give them your address instead of the person's address and have them send you that crypto that they had intended to take to somebody else or to send to somebody else. So that is how crypto works. And it is important that you understand that secure aspect of crypto because that's what gives it strength. A lot of people look at crypto as currency. The thing about currency is when you're investing in currency, excuse me, when you're investing in currency, you're just converting from one currency to the next to make small fractions of profit. And this is fiat currency, we're talking about US dollars, English pounds, Barbados dollars. A simple example, when the value of a pound used to fluctuate between $3 and say $2.50, you could buy the pound at $2.50, wait for it to go up to $3, sell it and get $3 for it. You made 50 cents profit per dollar with each transaction. So it's 3 cents profit per pound with each transaction. And the only way you can make a reasonable amount of profit is if you were to do a lot of those transactions, you do the transactions with high volume of cash. So keeping that in mind, let's get into some goals that people have pertaining to crypto. The first goal I have here is get rich quick. A lot of persons want to go on a crypto platform with an intention that they're going to make profit quick. Now, there are two ways to make quick profit in crypto, and both require luck and timing. You can invest a lot of money in crypto. You can invest a six-figure amount, and you invest in either a coin or a series of coins just before the value of that coin increases, say 3 or 4 times. Another way of making a lot of money in crypto is you can have a small amount of crypto and you can purchase some crypto or a few cryptos whose value then subsequently increase 10 to 100-fold within a short space of time. Now, the reality of the situation is it's pretty much impossible to predict that type of growth. And it's also impossible to know how high that growth is going to be when it starts growing. You may find a coin at the right time, you invest a couple $100 into it, and then the value starts increasing, and by the time it gets 20x, you tell yourself, okay, this is the top, let me take profits, and if you put in $100, 20x rise is $2,000 in value, and then the value of that coin keeps going up, and it peaks at 100x. And you're telling yourself, oh, if I had waited, I could have get $10,000 from my $100 investment instead of $2,000. But you never know how high it's going to go before it goes there. You never know where the top is. So pushing for hindsight is never a good thing to do. And it's the unpredictability of investments that should remind everyone that you just can't get rich quick. Sajid Kara. Assalamu alaikum. Hi, Yolan. You can't just get rich quickly in a predictable manner. So that is a possibility with crypto, but that is analogous to buying a lottery ticket. You could buy a lottery ticket, or you could buy a few lottery tickets, or you could buy an individual ticket in multiple lottos, and you may have either the winning number or you may have 90% of the numbers, and you could win a substantial amount of funds. But the chances are you probably won't. And if you have that get rich quick mentality for crypto, you'd have to do the same thing you would do if you're a person that gambles and play a lotto, because literally you'll be gambling and you will be investing. So the same way people who do indulge in gambling would buy multiple tickets over a long period of time, many years before they win. A person who wants to approach crypto with that goal will have to approach it the same way if you want to just invest $10 in a coin every month and hope it does 10x or 100x. You do it the same way you play lotto. Sometimes once in a million tries you get success, but the rest of the time you're literally just wasting money. And at the end of the day, you're gonna hope that what you do and when you do it covers all the tries from before, and you get some form of profit. And you need to realize that that's what you're doing if that is your goal, to get rich quick. You're gambling, you're not investing. So when you don't win, it's because the chances of are very slim. So it's an expected result. It's not because, oh, this crypto is just a fraud, it's a scam, blah, blah, blah. No, if you're actually doing what you call spot trading, where you buy a crypto coin on a crypto exchange, expecting the value to rise, and then the value either doesn't rise or it drops drastically. That is an expected situation. It's not going to happen quick every single time, and you're not going to be able to easily predict it. That leads to the next possible goal, persons who are a bit seasoned in trading, there's this term called a hidden gem. And that basically pertains to a coin that has a higher statistical likelihood to rise in value in a short space of time. And there are a few factors that can give that sort of value, that the coin's value may increase. It's usually a situation where the team of programmers, remembering that crypto is a software, is an encryption software, so not actual currency, it's being used as currency. But the team that developed the software may have a series of milestones that give additional features to the coin. And when those features are actually successful and they're launched, they may bring additional buyers into the coin. Because you're having a higher influx of buyers and less sellers, it causes demand to rise, which usually carries the price up. The reason this happens is because when you go and you purchase crypto on the exchange, there's something called an order table. Half the order table is a list of buys, the other half is a list of sellers. Basically, when people want to sell their coin, they list it for sale at prices on the exchange. When people want to buy coin, they're putting a buy request on the exchange. A person that's looking to sell their coin can just look at the highest buy request and click on it and satisfy it. That's the highest they'll be able to transact at that point in time. If they want to sell it for a higher value than what is the highest buy request, they just put in a sell request at a higher value and wait for someone to be willing to pay that much for their coin. Getting back to the hidden gem now. So the hidden gem, if the programming team is successful in updating these features, and these features could be something as simple as making the transaction times faster, which could then reduce the actual transaction cost, making the network more economical for people to actually use and transferring funds across them. It could be enhanced security measures on the site. It could be a lot of different technical things that actually make using the coin better for the people who are investing in the coin. And that then brings in another group of people into the coin because of these benefits. And once more buyers come, there is the people who possess the coins before then that have people to sell the coins to. Now with hidden gems, it's usually a situation where the coin is relatively new and these updates propel the coin to another level, a higher level than they currently are at. And there's usually an announcement by those who are already following the coin and who already invested in the coin that these things are about to happen. So what you can see is that the amount of buying of the coin increases because there's an expected influx. When people start noticing the gradual increase in price, people who are what you call the traders, they say, okay, well, this is a good coin to make a quick profit off of, and they invest in it. And sometimes, very rarely, and it happened with Shiba, that creates a pattern of purchasing where it seems the coin is rising high, so people buy it because the thing's going to rise even higher. And then it does rise higher because of those people who bought. So other people jump on and it propels the value of the coin up. And if you bought in the early stages, you found a hidden gem, and it results in you making a high turnover if you saw the right thing. Just like getting rich quick, this is something analogous to gambling. It isn't something that you can just decide to do. It is usually something that happens unintentional, where you just happen to be invested in a coin before it meets a milestone, whether you were invested for years before or months before, weeks before. And then eventually it happens and you get an increase in value, and you also wisely chose to sell some of your portfolio, some of your coins at that time when the price was higher to take all your profits. Again, with these goals in mind, it is analogous to gambling. So you're not gonna guarantee getting rich quick. taking that procedure. So keep that mindset if that's what you're looking for. That the same way you spend up to $10, $100 maybe in lottery tickets, scratch cards, or whatever, and you don't win, see it in the same light with crypto if that is going to be your strategy. The last one I'm going to speak about is for those who fail to understand what passive income means and is set out to achieve passive income by putting their funds into what I call an investment program. There are some programs that exist on the internet where people say you invest X amount of money and we give you 1% or 3% profit daily or a certain amount of profit, percent profit weekly. And people gravitate to that because you don't have to do anything. You just put money in and you get money out. And it's usually a smaller portion than what you put in, but because it's daily or weekly, within 3 weeks to 2 months, you could double your balance. You could make your investment back. And a lot of people get stuck in those programs. I have tested over 50 of those programs for people over the last year and a half, and not a single one of them was sustainable. One of the biggest ones that a lot of people actually made a lot of money from was one called Waterline. A lot of persons were successful in that one. That was one of the most successful of all of those programs. By the end of the day, those programs are just pyramid schemes. Simply pyramid schemes. The profits you get, they are just the investments of other people that come on after you. You're basically getting a commission for bringing more people in. The issue with every pyramid scheme is only the first 30% of the people within the entirety of the pyramid actually make profit or break even. It's a simple mathematical fact. There's no secret or way around it. Whether you go back in once or 3 times, if you actually follow the money as opposed to follow the English, it isn't sustainable. Everybody can't get something unless new people are going to come in. And in Barbados is a very, very limited population, so going around in that manner is going to quickly stagnate. That's just a fact. So those three goals that I mentioned, no one should have them when it comes to crypto because that's gambling. Crypto doesn't facilitate gambling. Anytime you try to, you're mostly going to be amongst the losers. It's just a fact. Now here are some real goals that you should have with crypto. The first one is have a passive income, not pretend passive income like the investment program. Passive income in crypto, you need to take 3 or 4 steps. You need to decide, okay, how much funds, sorry, are we going to invest in crypto? It needs to be a calculated procedure. And if you don't possess those funds right away, you need to accumulate it. It may take you months, it may take you weeks to save, it may even take you years to save. But you have to decide, okay, how much funds am I going to invest? And go about acquiring those funds to then invest in different coins that you're interested in. Now, once you've acquired the funds, choosing coins is going to be your next thing. It is important that you follow a crypto system very detailed. You need to follow their Twitter if they have, you need to follow their Facebook, their social media generally, because that gives you an impression of how the people who are already into the coin perceive it. Are the people who are working on the coin, are they constantly making the updates? Are they constantly achieving the goals that they set out for their coin? Or are they taking really long to get over certain milestones? Have they, made any progress within the last year or two? Are they advertising enough? Are they bringing, to new eyes to the project? Are businesses investing in them? These are a lot of things that you need to know and observe before you decide if and how much to invest in the coin. And it also is important for you to decide what strategy you're going to use. So once you've accumulated these funds and you've done your investigations of these coins you want to invest in, it is good to at least be in 3 to 5 of them. Putting all your eggs in one basket is never a good idea because there are a lot of external factors that can cause a coin to fail or to regress. Some are based on the actual team, how they go about stuff, but a lot of really negative factors are usually international stuff that's completely independent of the programming team. And at any point in time, things can happen. We've seen COVID, we've seen the whole situation with Ukraine and Russia. Now there's some issues with China and their supply chain and their economy. There are a lot of external factors that can cause cryptos generally to crumble. And some survive, some don't. And it is important that you make sure you have your investments spread not too thinly, but 3 to 5 different coins would be a good option. And you should also at least make sure that one of those coins, one of those three or one of those five, are within the top 100 ranked coins. Because those coins usually, apart from a few who are meme coins that just soared unexpectedly, most of those coins are stable enough to survive these market crashes. The next thing you need to do is to have a target financial plan. I'll give a simple example. If your mindset was to accumulate, say, $1,000 to invest in crypto, and you pick your coins, and your target for passive income was $100,000, well, then you now have an idea of where you need to be to start making passive income. What I mean by that is this: the $100,000 target, you may have that target because your long game plan is okay. There's this thing called staking for some of those persons who aren't too familiar with many different ways of making profits with crypto. Staking requires you to just hold your cryptocurrency and not spend it and get, you can call it rewards for doing that. Basically, how it works is the same transactions that I tell you about that happen on the crypto network. These transactions are validated by other persons on the network. When you stake your coins, you provide the resources for those transactions to be validated. When you do a transaction on the network, there's also a network fee for that transaction. So when you stake your coins to facilitate that validation of those transactions, you get a portion of the network fee that charged to the person who's sending the coins. Now, I'll give a simple example. A stable coin like USDT may give you a 4 to 4.7 annual yield return for staking their coins. What that means is for every $100 you put into the staking pool, you can get $4.70 after the year. But if you do the mathematics, if it's $1,000 you stake, you get $47 a year. If it's $10,000 you stake, you get $470 a year. If it's $100,000 you stake, you would get $4,700 a year. Now, at the end of the day, you're gonna realize that the only way you can really make a sustainable passive income is if you already have $1 million and you put it there to stake, then you can get $47,000 a year. That is about just under 4,000 US a month. The average person can live off of that. So a target of $1 million in that specific scenario would be your ideal target. So if you're starting with $1,000 and say your intention is to 10x your balance every year. So you start with $1,000, and after 12 months, you want to turn that $1,000 into $10,000 through investments. And you want to keep doing that every year. So the second year, now you want $10,000 to turn into 100,000, and then in the third year, you want $100,000 to turn to 1 million. And that is your trading strategy to 10x your coin after 12 months, every 12 months, and not take a cent out. And that is the part that a lot of people don't get. A lot of persons get into crypto looking to put in a few hundred or a few $1,000s, and then every month or even every 6 months they look to take something out. That is not the way to go about it. You can do that if you unintentionally hit the gym and you unintentionally do a 10x or a 50x or 100x. Well, yeah, whether you're investing $100 or $1,000, a 10x or 50x could definitely give you the motivation to take out a few $1,000s early. But unless by the situation like that occurs, you should just keep investing and keep your profits there and turning them over, diversifying them as you get bigger. That is a proper financial goal, and you're gonna realize that there's no get rich quick option for crypto that you can plan and strategize for. At the end of the day, it is hard work, it is dedication, there's a lot of stress, a few gray hairs for those who see me in person. But at the end of the day, once you stick to it, just like any other business endeavor, it can be profitable. And that is all you really need to focus on. Which goes into the last point I'm going to make. Having a long-term strategy for easy passive income. So that would be the goal that we just discussed. You make $1 million, you have $1 million in asset. No, you don't cash out. You don't go and buy the luxury home, the luxury car, and then after 6 months of gas bills, light bill, and water bill, you're broke. No. You finally made it to $1 million. Congratulations. What do you do? Well, you do your staking. Now you're making 47,000 US a year, which is, as I said, just under 4,000 US a month. Downsize your life. Live off of half of that. That's your passive income, your true passive income. You're staking, you're literally doing no additional work pertaining to those funds. But of your say 38,000, 3,800 US a month you're getting, you can take half, live a humble life off of it. The other half now, you can now look to do the things that you wanted to do in the beginning, the high risk trades, the coins that are worth a fraction of a cent that you hope let's make it to a dollar, do 100x or 10x. You can now do the risky trading and look to benefit from it. Know that you have predictable income passively, you have your salary that you can live off of comfortably. Now you can start taking higher risks because you built the foundation where, excuse me, you have assets that can bring you passive income without having to risk a mortgage being delayed, risk a rent payment being delayed, risk a lease on a vehicle being delayed. If you're a business person, you risk, say, you take a loan to get some funds from overseas and use some of that equity to then invest in crypto. You're risking those bank payments from being delayed. No, well, you have passive income that you can live off of in a humble life. You have your regular income coming through that's predictable. And you have some funds that you can dedicate to high risk investment. So that when you lose, it doesn't hurt as much. It doesn't affect how you eat, it doesn't affect how you pay your bills, it doesn't affect how you go about your life. That is how you should go about investing in crypto. Those are the goals that you should strive for. 5 to 10 years, be a millionaire, just so you can start having actual passive income, just so you can then begin taking a higher risk trades without it really hurting you financially if you lose. That is how crypto should be utilized if you're a person who isn't starting off wealthy already. On the other hand, if you're a person who can easily take $100,000 out of your savings and invest into crypto, you can do a lot more a lot sooner. You don't have to build to that $1,000. You need a single 10x within a year. Learn spot trading. Learn spot trading strategies. You can look at the value of crypto for Bitcoin within the last couple of weeks. If you look at how it does on a daily basis, it was just around 20K this morning. It dropped to 19,800, which means if you could buy a whole Bitcoin, and you could buy it at say 19,800 and sell it at 20,000, that's $200 you can make every single time you do that transaction. If you could do that transaction twice in a day, that's $400 a day. If you can repeat that 10 times a week, that's $4,000 a week, $16,000 a month. And that's a single Bitcoin you can do that with as long as the fluctuations are still within that sort of range. Which we know isn't a consistent thing. But whenever the fluctuations stabilize and it fluctuates 24-hour high, 24-hour lows, you can buy lows, sell highs, and make small amounts. Now, $200 over, say, 20,000. That's 1%. That's all it is. 1% turnover. But if you have $100,000, you can buy 5 of those coins. Still at 1% turnover. 1% of your $100,000 is over $1,000. And if you can do just that daily, 300 days in a year, that's $300,000 profit you can make in a year with $100,000. But all you need to do is a 10x ideally every year. Remember, as you make that profit, you're going to continuously reinvest it. You're not taking any out. So yes, if after a couple months you've made substantial profit, instead of investing as $100,000, now you have $180,000. You have $200,000 to invest. As soon as you hit $200,000 total balance, you're making double the profit you're making before. You went from $1,000 a day to $2,000 a day. So you double that, then you're going to $4,000 a day. So once your strategy is always to just keep doing small profit investments of 1 to 3%, once you have 6 figures or more, it becomes easier. That's where those who already have access to value and funds and money, for them it's a lot easier to do these trades. We did it with $100 now, 1%, that's $1. To us it seems, like a waste. But if we made $1 a day from a $100 investment, we'd have $365 more at the end of the year. We'd have $465 in all to invest with. We did that again the other year. We just 3x what we made. 100, we made 365 profit. We 3x or 465 the next year. That's $1,200. We 3x that. That's $4,000 there, 3 years. So it may take an individual longer, the less they have to start with. But you have to just keep going. It's simple mathematics. It may seem like a lot of work in the beginning, but it'll pay off. And a lot of people need to just look at 10 years in the future. If you're employed right now and you're not self-employed, and you can't look at a 10-year future, even though you're working for a fixed salary every month, then you're just wasting your time. Put crypto aside, you should be looking at taking something out of your salary every month if you can and accumulating it to buy something of equity. You should be working for a goal in the future. And as soon as you apply that same mentality to crypto, as opposed to applying the lottery mentality to crypto, that's when you're going to start seeing success. Alright, so it's on that note that I'm going to end the conversation. If anyone has any questions, they can post. I'll give you a few minutes and I'll answer your questions. We have a WhatsApp crypto group that you can join in case you want any additional tips on investing in crypto. If you just want to have questions answered. And I also am a crypto broker, so if you want to buy some crypto or if you want to liquidate crypto for Barbados dollars, you can also hook up with myself. This is for persons who can't get it done themselves. There's some persons who their banks are blocking their crypto purchasing transactions, so I can facilitate those for them as well. So, if there are any questions, I'll give you guys about 5 minutes to post them. As I said, there is there's a minute or so delay. So, when I'm saying this, or just when you're hearing this, I would have said it at least 30 seconds to a minute prior. So, please forgive me for any delays whatsoever. For those who did join Mobokaria, Mazi, Baby Cakes, for the fans, anybody that I would have missed previously because I was yapping my big mouth, thank you for joining. I'm going to try to do this a little bit more regularly. What else did I miss? Live Love Last, Sweetie Boo, my wife, Walaikum Salam to Sajid Kara. Alhamdulillah, I'm doing well. Hope you're doing well as well. Yolande. Any questions could be about anything pertaining to crypto, anything you want to know about crypto, anything pertaining to what I would have mentioned. If you came in and missed any of it, I am recording. I think. Did I hit record? Huh, I did not hit